All right, we have just a few minutes left until the closing bell. Let's see what's driving today's trading. Still with us from the markets desk is Julie Hyman, also Dominic Chu, and Adam Johnson. Live at the Chicago Board Options Exchange, Matt Schapiro of MWS Capital, who has over 15 years of experience as an options trader and money manager. Also with us is Hugh Johnson, the Chief Investment Officer at Hugh Johnson Advisors. Hugh says that he doesn't expect much action until after second quarter earnings season kicks off, which is in just a few minutes when Alcoa reports. Also still with us, Bove of Rochdale Securities on the floor of the New York Stock Exchange talking financial earnings. Hugh, let me just ask you quickly what you expect from earnings season. I mean, we see the kickoff with Alcoa in just a couple of minutes. Do you think that it's going to be a tough quarter as the comps aren't nearly as good as they were?
Yeah, it's hard to say. You know, I think on a year-over-year basis, you're going to look at the numbers and you're going to say they look awful good, especially if you look at, I think, the financials and you look at the face of it. You look at semiconductors, you take a look at the energy companies. We're talking about a $74 oil price versus 62. So overall, we're talking 30% gain in earnings. The real question is, first of all, are they going to be better than the 30% or better than expectations? And secondly, what are the companies going to say about earnings in the current period as well as the third and the fourth quarter? That's what really worries me. Third and fourth quarter, what are they going to say about business?
You know, Dick, let me bring you into that, because what do you think we're going to hear from the financial companies about what goes on in the third and fourth quarter? Are we going to get much visibility? Are we going to get a lot of negativity? What do you think?
No, I think they're going to be relatively positive. I think what they're going to say is that, you know, they think non-performing loans are peaking in the industry, that their need to build reserves for the next few quarters has been reduced, and that they expect that their earnings could be somewhat better. So I think even though some of the bigger companies are going to have disappointing earnings, that most companies are going to say that things are going to look better as the next couple of quarters roll out.
All right, so let's get back to our discussion of what's driving the markets. Bove joins us from Rochdale Securities. We also have Matt Zeman of MWS Capital and Hugh Johnson of Hugh Johnson Advisors. Dick, we were talking a little bit about bank earnings. I have a viewer writing in and asking your take on Citi. What do you expect from Citi here?
Well, I think Citi is going to have a lot of one-time events in the quarter, which will give them a small profit for the quarter. But you know, I think that their core earnings are still going to be suffering from relatively high loan losses in the residential real estate market, and also I think that their trading activity and their investment banking activity, similar to Goldman or J.P. Morgan or any of these companies, are going to be difficult for them. So I'm not looking for a great quarter for Citi, as I'm not for any of the big banks.
You know, Matt, what we will hear from Alcoa, and I should point out the stock's halted, no surprise, we're waiting for those earnings numbers. Matt, what we get from Alcoa, will that give you any clear indication of what might be ahead for the rest of the earnings season?
I think so, but Alcoa for me has always been a little bit of an outlier. You know, the stock's been under pressure for so long, and of course the aluminum business is very tough. I would like to say that down here on the floor, I think for the first time I've noticed that the crisis bid just seems to be out of the options market. The VIX is about 24, and the way the paper has positioned themselves in the VIX volatility trading pit here on the CBOE is that the VIX could even drop down to 20.
And of course, that is Matt Schapiro. I said Matt Zeman, but I meant Matt Shapiro.
It's a Monday. It's a Monday.
It's a Monday, but you know what? Is it going to stay feeling like a Monday going forward? I mean, Hugh, do you think that we're going to see low volume continue? Do you think we're going to see low participation continue?
Yeah, well, it's the summer for one, and I think that's one of the reasons. The other reason is you've got to get well into the earnings season before we start to get any direction. Once we get some direction, we'll get more volume, but it's still the summer, so you're not going to get a lot of volume. This earnings season is absolutely crucial. It's crucial not just for the next 2 or 3 weeks or the earnings reports themselves, but it's for the entire quarter. It's going to set the tone for the quarter and tell us an awful lot, and this is important, an awful lot about what's the state of the economy in particularly May and June. That's what I'm really interested in. Are we in the process of seeing a significant slowdown in the economy, maybe even a negative growth in the second quarter? The real question is second quarter, what's going on, what went on? And these earnings reports are going to clearly tell us what went on.
Dick, you agree that this is kind of a crucial quarter here? We're kind of at an interesting juncture?
Well, I think we're at an interesting junction in the economy. I'll agree with that, but I'm not sure that it's a crucial quarter for the financial companies. I think that the financial companies are probably going to see improved improved earnings throughout the year, even if the economy tends to slow down from the current point. So I'm not as keen on the fact that this is going to be a crucial quarter for at least these companies.
All right, so we have Matt Schapiro standing there, MWS Capital, Hugh Johnson of Hugh Johnson Advisors, and also Dick Bove down there. Hugh, let me ask you, you talk about earnings setting the tone, setting the direction really going forward. Does this kind of report, and if we see earnings beat across the board, does that take everybody's mind off of Europe, off of the problems with Greece, and off of China putting the brakes on maybe? Do we focus on the U.S. here?
Yeah, we're focused on the U.S. and we're focused on U.S. earnings numbers, and then we'll be that for the next 3 weeks. It doesn't mean we're going to ignore China. It doesn't mean we're going to ignore Greece or what's going on in Europe. Obviously, you're continually asking the question, what are events in Europe going to do to impact the U.S. economy? But believe me, when you get reports like the CSX report, if you get enough of them, if they overwhelm you, you're going to have a positive tone to the market. So this is a great start. We need to see more of the same kind of information. Again, we got to look closely at those earnings numbers and the revenue numbers, but it sounds like a real good start.
Hey, Matt, it's Dominic here. One of the things that, people are talking about is this journal article this morning about how, assets and stocks are pretty much just all correlated now. It doesn't matter if you're a stock picker, because if you pick a stock, even if it's a good one and the market goes up, it goes up. But if it goes down, it goes down too. Is there any reason people should be stock pickers now, or has index investing pretty much overwhelmed everybody in the marketplace?
Well, I am a stock picker, and I do believe that actually makes you pick stocks a little bit better, because you can shift into these U.S. blue chips that pay 3% dividends, very diversified, very strong companies such as Procter & Gamble and Johnson & Johnson. So when the market does well, they'll do well too. And it means you don't really have to pick that second and third tier stock, especially in an environment where I believe the U.S. market is at nearly a generational low valuation with about 11 or 12 PE and a 3% dividend yield. So I don't think stock picking is dead at all. It actually allows you to shift into large U.S. blue chip stocks and do well.
Dick, you mentioned that in terms of you kind of break up the financials. You said you'd be putting money on regionals at this point. We had a nice run up in those bank names last week, like we did with the overall market. I think the KBW index was up something like 10%. I mean, in terms of valuations in the financials, are they getting a bit lofty in your view?
No, not yet, because if you take a look at what they were selling at, relative to the past 10, 15, or 20 years, they're selling at very low prices relative to book value. And if you assume that at the peak that they'll sell at 2 to 2.5 times book value, most financials are selling at pretty cheap prices at the present time. What we're dealing with is the need to get through this period of loan loss. But once we get through this period, I think these stocks should move up, fairly significantly from the current level.
Hey, Dick, let me get your take on FinReg reform, because we had a piece earlier saying that if anybody could kill this legislation right now, it's the smaller banks that could really do the lobbying on Capitol Hill. And I remember last week we had the smaller banks. Someone wrote a letter around saying, please don't try and kill this. Are they trying to get it killed, and could they?
No, I don't think at this point anybody can get it killed. I think that all of the political arrangements have been made to have this bill go through by the end of this week or the beginning of next week. Personally, I think this bill is a disaster, right? I think that every consumer in America is going to see the cost of banking go up as a result of this bill. I think it's going to take some liquidity out of the capital markets, and I think that while the banks will come through it, that nobody else will. The consumer will suffer, the markets will suffer, the economy will suffer, but the banks won't as a result of this bill.
All right, got about a minute left here. Matt, let me ask you, 20 seconds here. What do we focus on next? Is it the next big earnings report in your view, whether it's JP Morgan, you got General Electric, you got a lot of them this week?
Well, definitely the tone, but also the technicals and the VIX. Remember, in the VIX, the paper's thinking that it could fall down to 20, meaning we're going to continue this rally on very positive earnings news.
All right, 20 seconds left for you, Hugh Johnson. So we got Alcoa, looks rather good here. What are you going to kind of keep an eye on this week? Well,
you're going to keep your eye on the financials, a report of the financials. And when it comes to the financials, take a look at loan loss reserves, the additions to loan loss reserves. They're still going to be increasing, but increasing at a lower rate. I think, I hope, I cross my fingers. That'll give me some idea where we are in the credit cycle. In other words, our credit market conditions improving. But once you get beyond the financials, you've got to look at all of the earnings reports, and we'll be seeing those close the next 2 or 3 weeks, and, and really, that's what it's all about.
A lot to keep us busy. Hugh Johnson, thank you so much. Matt Schapiro out there in Chicago, and Dick Bove on the floor of the New York Stock Exchange. Gentlemen, thank you so much. We appreciate it.